Today's episode of Market Talk brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Thank you for joining us. Welcome into Market Talk for this Thursday, September 30th. I'm your host, Jesse Allen. Thank you so much for being here. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com is where you can find us. All the links to our social media, our streaming sources, of course. Anywhere you can find podcasts, you can find Market Talk. We also have, of course, the latest news, market information, and more. It's all on our website, MarketTalkAg.com. Well, we come in here today. We get the USDA quarterly grain stocks, small grain summary. It's the end of the quarter. A lot of things to discuss here. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here this afternoon. Bryan, great to have you on again today. And there's no shortage of items to discuss here today. I think just to start overall, soybeans were kind of the big story of the day with that quarterly grain stocks number. A lot of surprise there. We saw that reflected in the markets, down pretty hard today. Let's dive right in. What do you make of those numbers from the soybean standpoint from USDA?
Yeah, thank you, Jesse. And the numbers, the books will close out now with 256 million bushels of carryout, and that's quite a big difference from, if you might remember, in early summer, there was a lot of talk. Boy, they got to keep it at 100 or 125, 150 million just to keep it on the books. All of a sudden, we've kind of doubled that. So where does it come from? And then you kind of dust off the weeds here and start looking, well, where is this change? And it came in from a revision from last year on yield. So you took yield from 50.2 bushels an acre up to 51. That's pretty much where the numbers came from today. So that was a bit of disappointment. And as we were kind of talking before, how do you prepare for an adjustment from a previous year? There's just no real way to do that. It's not a line item that the market debates beforehand. So we have all these pre-report estimates, and then you kind of get hit with this. A little bit disappointing because if you're a producer, it's disappointing. Now, if you're an end user, maybe a little bit more of a break. You've been paying high prices for several months, and all of a sudden soybean meal's down $10, $12 today. But soybean oil finished higher, more reflective of tight world vegetable oil supplies. Palm oil continues to hover near or at contract highs. And now we've got harvest. You've got a value of the dollar striking higher. The head scratcher, though, even with an increase from last year, Jesse, for me, the head scratcher is this appeared to be a big cash led rally this year with tight bases and the continued talk that, man, they just can't find beans. Unless the processors really stoked up on them and then hedged them, I don't know if there's that many beans. I'm questioning it.
Well, and that's what I was gonna say as well. I mean, are we hiding beans in a bunker somewhere that we don't know of? I'm just as perplexed as you are, and I think everyone else is at those numbers and looking at things. We do know we're having a good harvest on beans right now, so it sounded like there's gonna be a good supply out there, but I'm with you. I just don't know where these beans are at, where this comes from, and I agree with you. I think it's impossible to prepare for a revision like that in the markets.
Well, we can prepare for it and just say, look, the market can always get a surprise and go up or down, but we can't necessarily prepare for the why. I don't know who can outguess that. Now, here's the interesting thing. Beans ended the session around 25, 28 lower. For the month, November beans lost about 36 and a half cents. So really coming into today, beans are down about 8 cents for the month. My goodness, considering harvest results so far, probably pushed the needle to maybe a little better than expected. The whole Hurricane Ida, backlog and problems down in the Gulf. Um, other than today, not a bad month. So I think what we want to look for here is we want to, we have to be respectful of the number, but we want to look to see if the market really believes it, or if it's going to look ahead and say, unless yield this year is like 51 or 52, we're still going to stay kind of tight. this does maybe sort of satisfy one thing for me. When looking in advance and looking at the crop ratings, poor to very poor, and those things, I know it's really hard to predict yield in beans, but it just didn't justify probably this, 51 and a half, 51 and three quarters bushel, something like that. Maybe it might now, but um, the ratings, I think, indicate that because they're less than they were last year. The crop is probably less than it was last year. So we'll just see. Farmers have ample storage space this year, we believe, and we'll see if they dump the beans and store the corn with high fertilizer prices. I don't know if they're going to do that.
And that's a lot of things to
A
consider.
lot of
And
things they might, yeah, but
well, and I think another thing too here, I'm with you. We'll watch the overnight. We'll watch tomorrow. Where do we end the week on soybeans? I think that'll be key. Do we come back in here and buy some of the break like we've seen how many times this year? I'll be interested to watch that. I think as we get into tomorrow, Brian.
The other thing that's going to be interesting to watch is we've been expecting all along, and you see it in areas where basis is going to widen out for corn, but it's actually stayed really tight. They're still looking for corn. These ethanol plants have a good margin. Part of that is that good margin is ethanol plants that basically shuttered or closed down for maintenance. There's just not as much ethanol being produced because the grind's lower. So you get some better margins there. Corn was headed one way and energy is the other. You've got that dynamic. Probably expect basis levels to widen after today just because there's nothing else out there right now. And this rally in corn probably brings some farmers selling to hand. But here's the interesting thing: December corn down 2.5 cents for the month. Again, right into the heart of a harvest month. That's not a bad month. Good comeback off a negative supply and demand report in on September 10th, and then a pretty good close today compared to where it looked like it might have been heading 10 lower, 15 lower. It came zipping right back. So when you have a mixed finish and you got new crop for next year hitting 525, I'm going to kind of chalk today up as a pretty big victory for the corn market.
I was gonna say that as well, with the numbers where they came in towards the higher end of the pre-report estimates, and just looking at everything and the dynamic we have in the corn market right now compared to soybeans, with maybe some crop issues out there as well. I'm with you. I'm in the camp of I'll take two lower today. I'll take two at a quarter lower on December corn. That's a win-win in my book after what we saw.
Yeah, it sure is in our book too, and we just can't kind of all of a sudden build carry out overnight. We're going to have surprisingly better yields on the last, let's say, 75% of the corn, and we could. You never know. What's always interesting is just job is hearing from farmers, and I heard from some today that but they're pockets. I got to tell you, but some were saying, "Oh boy, this is great. Corn's running 20, 30 bushels better than we thought. And beans are 10, 15 bushels better. We're thankful for this." But almost everyone I talked to like that kind of continue to talk and say, "Yeah, you don't have to really go far." So there's all this kind of let's call it uncertainty with what final yield expectations and the first, let's say, quarter of harvest suggests that sort of let's say extrapolation. I think is the likeliest one.
On the wheat side, I'd say wheat was a winner, bigger winner today than corn, maybe, or at least right along with it. All wheat production down 51 million bushels. I mean, you look and that wheat markets, Chicago, KC, Minneapolis, Spring, they're all kind of held down. It felt like a little bit by beans today, but still found their strength and had a nice close today. What are your thoughts on those wheat numbers, Brian?
Yeah, that's great. And I'm not looking at all the numbers, but what I'm looking at is the all wheat was actually down 77 million from expectations. So yeah, it again another, let's call it, drop in that bucket with declining inventories of wheat, both domestically and worldwide, and just what are exporting countries likely to have available for the world market. So good report for wheat, and more importantly, a good reaction from the report. And that's always key. You don't want to get a favorable report and then dump out on it. So we're happy with today. I don't know if we're, let's say, bullish. Usually you got to kind of keep feeding the bull, but boy, the bear didn't get a whole lot of ammunition today to work with. So really solid finish there. I've got, if my math is right, 18% drop in wheat stocks from a year ago. That's pretty big. Um, And this today, despite the dollar just shooting higher in recent sessions, looks like it's maybe off just a tad right now, but on the monthly close, looks like the dollar is going to pick up about 1.6 points. Probably 2.5%. That's a big amount in 1 month. So so good close for the wheat for sure.
And that's my thoughts as well. Good close for the wheat. I'm going to be curious to see, the next couple of days ahead, and we get into October. I know with all the government worries out there and everything else on the outside markets and financials, but that dollar, if that dollar continues to strengthen or be strong, how much of a headwind is that going to give to the wheat market? I think that'll be something to watch, Brian.
Yeah, it will. Here's something that I don't want to draw too many conclusions here, but if we look at what feeder cattle futures did today, they're down a couple of bucks basically, buck 80 in or no 207 in October, 237 in November. When you see them down like that, you kind of usually see them on days where you might look across the aisle, let's say, and see corn up a bunch. Corn wasn't up a bunch, but it wasn't down a bunch. So I wonder if the feeder market wasn't, prepared for, some maybe bigger corn numbers and confirmation that crop is here, and that may in part hampered feeders today. The live market was down as well, continues to struggle. Still seems like when you look at long-term continuous charts, you want to be bullish on this setback, but it is not finding the strength that we want to see. It's kind of an unhealthy looking market right now.
Let's talk more about that. Let's segue to livestock here a little bit, Brian. Cattle, I know the export sales numbers Thursday morning weren't great. They weren't bad. They weren't great. Cash, we're trading pretty much steady with last week, so maybe some folks are considering that as a win. But yeah, I'm with you. This cattle market just not looking healthy with all these different factors out there in the trade right now, Brian.
Yeah, if you look at like the monthly December cattle chart, 10 out of the last 11 months, positive gains. So we've been in this, wonderful, I'm going to call it uptrend. I think the market's really scared right now, or shaky. You don't have to look again too far across the aisle and see a stock market that really looks shaky right now. It's been hit kind of hard, comes back, and then gets hit right back hard again. You've got energy markets that are moving higher. I think there's some legitimate demand concerns, and they may not even be domestically. It may be more overseas to China. How much supply do they really need if they're liquidating some of their um, hog herd? There's a difference between hog or pork and beef, but it kind of makes you wonder. So I just don't. My opinion on that is the trade just doesn't like that sort of lack of momentum or uncertain news until we get a little bit more confidence that this Evergrande is either going to hold together or just be done with it and blow out. The market just seems to be wanting to. Um, let's say be really cautious, and that's how I feel about the cattle market right now.
Well, on the flip side, hogs today, very strong export sales report. We were up 31% from last week, 36% for the 4 week average, 42,500 metric tons for net sales. China was the number two buyer. I think the trade was really looking for that. And they weren't too far behind Mexico. What are your thoughts? Just the way hogs have been the last few days. We had that bullish quarterly hogs and pigs report last Friday. I get some really strong export sales for the week and another strong up move today in this hog market.
Um, I, it looks to me like you kind of got to connect the dots of going back to last summer. And what did euthanasia look like? And then what did higher corn prices look like for the producer? And they had a lot of heavier animals actually on hand. A lot of the ones we talked to deep in the fall, early winter. So they may not have actually been, they may have been catching up and trying to get their herd a little more current. Um, and or I'm sorry, they had the supply, so they weren't trying to, build the herd. There's a lot of uncertainty, grain prices higher. That's kind of what it's looking like to me, is that you just didn't get the needle dropping down into let's build supply. All of a sudden, you kind of scratch your head at this last hogs and pigs report and go, well, if this is accurate, we've got a tighter inventory. And this tighter inventory was quickly bought into the market. I mean, the market bought it. So again, it's one of those things where you get, that's friendly news, and then get a friendly reaction to it. Now, can hogs blow up from here? I My theory is no, you can't take hogs I mean, we saw what happened when hogs went positive to cattle. Remember that? And that was very short lived, and the hog market really flipped over. So I think there will be a natural sort of move toward maybe hogs running out of gas, and then cattle at some point trying to pick it up a little bit here. But um, yeah, demand is a concern. And I've never seen such an odd environment where the workforce is, in theory, non-existent, or you can't find people. Yet at the same time, we're worried about demand, or it seems like we're worried about demand, and just a strange event. So, with that, again, my my kind of approach or theory is there's a lot of things out there that you can't outguess. So as a producer, you've got to do all this thing to maximize your production, and then you've got all this marketing over here of your inventory. Um, really spend some time on that sector, or hire somebody to do it, or know your tools, and just take advantage of opportunities when they come.
Well, Brian, I'd like to get your thoughts as well. We got these USDA reports under our belt. Now we turn our attention to the October WASD. That's going to be probably the next big report ahead of us. And one has to wonder here what trade could potentially look like the next about 2 weeks or so till we get to that report and what that report could potentially look like. Do you have any thoughts here, just
Mm.
or any words of advice as we kind of work towards those numbers coming up here in a couple weeks?
There's a lot of the Midwest that really struggled with, let's say, dry weather and production this year, and the emotion of that usually suggests that if I had to guess at this, um, people are more worried than maybe not, and there were some timely rains in pockets. So I would suggest the needle of yield probably ends up a little better than expected for many because they kind of braced all summer for something not so good or been tight on moisture. And um, with that being said, I just can't get away from, there's three things that are going to kind of determine where we go in the marketplace here the next 2 weeks, 3 weeks. One will be harvest pressure and yield results. We'll get a lot of news every day. Everybody's out there beating the path, trying to get reports from farmers and elevators. So we'll get more of that. Two, we'll keep an eye on this energy and fertilizer thing. That's concerning. Um, and then the third thing, we'll just see how the basis works. I mean, typically, I would look for basis to widen out as we move into that first, second week of October. Just a lot of stuff that can come to town, and there'll be farmers that have overrun. There'll be farmers that don't have enough storage, and we'll get that into the pipeline. But after that, um, I'm of the opinion that we didn't hit it today. We had 548.5, but we had 5 months in a row where December corn traded 550 or higher, and we're really close today. So I'm going to say close enough for, as they say, government work and hand grenades. So if farmers, they shouldn't feel like they've missed anything. Corn around $6 lasted days, but corn around 550 was there for a long time. So my suggestion would be, look, if you're in doubt, this is good money. Look at the carry, work the bases, do all the angles to try and squeeze 10, 15, 20 cents out of this market. If you're a little bit more bold and you want to store, sell some calls above the market 60 or 70 cents. See if you can collect that premium or get hedged higher. Those are things that now the farmer needs to, along with his harvest, to really be kind of thinking about and or protecting in case this report was a little heavy. So that's just a fact. So um, we'll go with that.
Well, great insights and analysis as always. And if producers need some advice, I know they can reach out to you and the team there at Total Farm Marketing. And it can all start with a simple phone call, can it, Brian?
It can, right. And if you call into our office, we'd love to hear from you, see how things are going. I'm extension 300, so start with that. Or just ask for me, 800 So that's obviously a plug for myself, but really, if you have any thoughts, questions, let's take a look at it. Let's work with it. Let's put it on the table. I've done this 32 years, and I generally find sometimes the best ideas come out of small conversations where people get a chance to kind of just say, "This is what I'm thinking," but they don't necessarily want to ask their brother or the guy in town, or they might. There's no wrong to any of this. Let's just make sure it works for you.
800-334-9779 or online totalfarmmarketing.com. Brian Doherty, appreciate the time, the insight as always. Have a great rest of your week and weekend, and we'll talk to you next week, sir.
Jesse, I want to thank you very much for this opportunity, and good luck to everybody, and please a safe harvest.
I will agree with that as well. Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, September 30th edition of the show. I'm Jesse Allen. Have a great afternoon.